Markets were euphoric as Chair Powell and the FOMC began to contemplate cuts. Hi, I'm Jake Schurmeier, Portfolio Manager, with this week's episode of the Harbor Lookout. The December FOMC meeting upended last year's talking points. Rather than focus on the probability of additional firming, the committee is beginning to consider the appropriate time for cuts. This message came through in a few different ways. First, the dot plot included an additional cut in 2024 instead of the 2 cuts investors expected. Second, Chair Powell said that committee members generally agree that another hike is unlikely. Conditional on that view, the next question the committee discussed is when it will become appropriate to cut interest rates. Third, with the supply side of the economy improving, the FOMC is seeing steady progress on goods, housing, and non-housing services inflation. That progress, next to a restrictive policy stance, means the committee must consider cuts before inflation reaches 2%. While subtle, this means the committee is moving back to discussing policymaking in terms of its forecasts. This is a departure from 2022 and 2023, where the policy discussion often ended at inflation is just too high. The market response to Powell is clear as well. A falling discount rate lifted nearly all asset prices. Anything that was particularly sensitive to higher interest rates, areas like banks, small caps, or unprofitable companies, outperformed significantly. Similarly, factor performance reversed, with value and volatility doing quite well, while quality, size, and profitability underperformed. Pricing 6 cuts in 2024 is likely premature given inflation is still above 3%, and it is difficult to tease out how much of the relative performance is just mean reversion versus a durable shift for 2024. However, in the short run, there are a few obstacles to year-end to further mean reversion or pricing more cuts than the Fed's baseline. Thank you for your time today. Happy holidays, and stay tuned for the next episode of the Harbor Lookout in 2024.